Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And happy Monday. It's Kerry Lutz on the Financial Survival Network. Date is December 22nd, 2014. It's Manipulation Monday, which means it's time for Andrew Hoffman. It's our last interview of 2014, and we're going out on a low note. How are you, Andy?
I'm doing just fine. If you called me an hour ago, silver was down about 8 cents. Then we had a terrible housing number. The Dow is the exact same, up 90 as it was then, and silver's down 45 cents.
And gold is down, God,
$11. It was up
$11, yeah.
But more importantly, oil prices, this is now the 4th straight day that oil prices magically got propped up early in the morning and crashed horrifically during the day. I mean, it was 58.50 about 5 or 6 hours ago. Now it's down to 55.60 and plunging. And again, at these levels, probably 3/4 of the entire shale industry is underwater. That's just on a break-even basis, let alone all the money they got to pay back and all the sunk costs that they financed with junk debt. So you're talking about a free fall right now of an industry. I wrote an article a few weeks ago that said shale 2015 equals subprime mortgage 2008. And, I think it's going to be bigger. It's not just going to be bigger here. It's going to be bigger around the world because there's so much high-cost energy production. And just like the Saudis did in the 1980s, they're going to smoke all of it out, except back in the 1980s, it wasn't all financed by zero interest rate financing by the Fed and Wall Street. It's just going to be a catastrophe of epic proportions, which is why you're seeing currencies around the world in free fall. And it's not just the ruble. If you're watching the mainstream media, they just hate Russia so much, they just talk about the ruble. I mean, we're talking about Indonesia, Nigeria, the Canadian dollar, the euro, which is about to break its whatever it takes lows, the yen, which is at a new, I'm not even sure how many year low it is, 5 or 7 years, et cetera. I mean, we're talking about across the board currency crashes, which is what I deemed months ago the single most precious metal bullish factor imaginable. In fact, you even see the Chinese currency is falling as they step up the final currency war against Japan and others. And, it's only going to get uglier in 2015, especially because that stronger dollar per se, which is simply because people are fleeing to liquidity, not because the economy is strong, it kills the earnings of U.S. multinationals. So they're going to all lobby for the Fed to print more money, which of course they will. And they're going to have to because the economy is collapsing anyway.
Yeah, when you consider what has to happen to exports, right? So much of the economy is export driven and demand for exports is vaporizing before your very eyes, right?
Well,
so
we just saw the current account deficit or the trade deficit just plunged last month. Remember, it was last week they announced it was supposed to be 95 billion. It was 100 billion for the month. And China actually reported an all-time high trade surplus. So these are trends which are only going to get worse. Especially with the oil price down. Remember, this was the only thing it was not only the only thing that was providing GDP growth, it's been the only industry to provide actual positive job growth in this country for the past 7 years. And now it's going completely in the other direction. I think we just had the biggest rig count decline, and this is my specialty from years back, in I think it was 5 years, and we're just getting started. Across the board, the strong dollar hurts everyone around the world. It causes inflation in most places. And it causes, quote, deflation here.
Well, hey, have to say, we've got non-inflationary gasoline at the pump. I paid $40 the other day to fill up the tank, lowest it's been in years. So I think I'm going to go buy a flat screen TV. I'm so excited.
Well, you certainly can because they're very cheap. Heck, I was just looking at Amazon on Sunday morning, discounting all their Kindle products by like 30%. Going into that final shopping day of the year. I mean, look, we knew what the Black Friday numbers were. They were horrific. I mean, it was down 11% from last year, which was the worst since 2009. And there's no doubt in my mind that when all's said and done, this is going to be somewhere close to, not 2009, to 2008. It's that bad. Yeah. And of course, most of the sales now are online, or I should say a higher proportion, which means even more job layoffs. I think 2015 is going to be characterized as retail Armageddon, as all these brick and mortar stores go out of business. And then my next question is, when is the government going to institute an online sales tax? I mean, if no one's buying from the retail sector except online, well, why wouldn't they? I mean, what is different about online?
What gets me, though, Andy, is you hear these idiots on the mainstream financial media, and they're talking like everything is fine. The Christmas sales couldn't be better, And I talk to you, and we talk about the truth, and then I hear these idiots, and it's just, God, it's just the divergence, the cognitive dissonance, if you will. I know that Christmas sales are awful, and you know it. And anyone with half a brain knows it, right?
Well, the numbers say that. I mean, they just simply on TV, not that they have any ratings. I mean, again, CNBC's ratings are down to where they were when they came on the air in the 1990s. But they simply, because they say it's better. Like I saw the other day a headline that said, "Is Super Saturday the new Black Friday?" Meaning they're like trying to say, well, it's been so bad, let's just try to pretend that everyone's shopping this. But I told you on Super Saturday, there's deep discounts. I mean, we know Amazon.com is already now operating in the red on an operating basis, forget on a net basis. And now they're slashing prices in the middle of the holiday season. And you see today, the existing home sales number came out. It was the biggest drop in 4 years. And this with the lowest interest rates that we've had in our lifetimes. I mean, just because they say it doesn't mean it's true. Case in point, the mainstream media, heck, even Zero Hedge. And I talked about it in my audioblog the other day. This whole thing is the Fed going to take considerable time out of their statement, as if they did, it would mean anything. Either you raise rates or you don't, or you say, I'm going to raise rates on X date. So they made a big hype about it, and they talked, they're going to do it. And then it comes out, and even Zero Hedge says, meet the new patient Fed, no longer considerable time. And it says all over Bloomberg and Yahoo, it says, look, the Fed took it out. And when I looked at it, they not only didn't take it out, they literally didn't even change the language. All they did was insert, if you look at their the red line, they inserted a sentence in front of it that says, we can afford to be patient with the rate of rate increases consistent with our current view that we will wait a considerable amount of time. I mean, and yet it says all over the headlines that they took out considerable time. They didn't do that. And in fact, they survey all the Fed governors and say, well, what do you think the Fed funds rate will be at the end of 2016, meaning 2 years from now? And at the last meeting, which was only 5 or 6 weeks ago, they said 2.9%. Now in just 5 or 6 weeks, they said it's 2.5%. That's how much they came down on their expectations. And yet Janet Yellen's statement says, we are completely comfortable. The employment business, the employment labor gets better gradually. And they said once the transitory effects of lower oil prices and other factors, whatever those other factors are, go away, things will get much better. They are calling the biggest plunge in oil prices since the heart of the 2008 crash at a time where costs are so much higher and financing is so much more deadly. Around the world, they're calling this a transitory factor, which is probably why, amazingly, literally, in the 2 hours before she spoke, oil amazingly rocketed higher from 54 to like 58 and a half. And as soon as she spoke, it came back down. And here we are again in the low 55s. I mean, it's mind-numbing. It's just a matter of, if the stock market is higher, we can say whatever we want. That's basically what it's come to. I mean, look at this morning. Plunging oil prices, horrible housing numbers. I mean, look at this. In Belarus, they're having a hyperinflationary panic and all this stuff with the geopolitics, et cetera. And the Dow was up 80 points when I woke up, and it's up 80 points now. I wrote an article yesterday, called 853 Points of Infamy, meaning from Tuesday morning up and through the end of the weekend, with all these horrible things going on, just because the Fed spoke, they took the Dow up 850 points. It is incredible to watch this.
Yeah. Yeah, like what world are they living in? What reality do they occupy?
I mean, if you looked at the headlines, I was in the gym on Friday as the markets were closing, and they had the Dow up again for like the 400th day in a row, and they're just flashing across the CNBC screen. They just came saying, "Oil $57 a barrel, oil $57 a barrel," and you could see them interviewing everyone and going, "Yeah, see, oil's on its way back up, and everything's going to be great, great, great." And here we are. It's not 12 hours later trading, we're down to 55.40, plunging again, and the Dow is up again. I mean, it really comes down to this. There is no dissonance because we know we have an all-time low retail participation. It's not like the masses are buying stocks. It's just that the media thinks if the Dow is up, they literally can say anything. They could say space aliens from Mars are getting ready to buy the stock market. And people go, well, maybe they're right because the Dow just keeps going up with all this bad news. Maybe they're onto something. Yeah,
you're so right. And space aliens invade will be great for the defense industry, right?
Hey, I'll bet, like Mars attacks. I'll bet you it won't be long before some of our U.S. dollars actually make their way out to Mars because we're printing so many of them.
Yeah, hey, and that'll be great because it'll help reduce the inflation rate, right?
You look at the current. I mean, the number one thing someone was asking me the other day: what are my top things that I'm looking at? The things that worry me the most. And the number one, of course, is commodity prices. They are in free fall around the world. There's nothing. Heck, even food prices. We talk about need versus want. Even food prices, probably with a few exceptions. If you have the droughts, maybe I haven't even watched what coffee's doing. Beef is still high, but a lot of even the food prices are being caught up in the fact that there's just so little demand out there around the world. I mean, that's number one. And the oil price, if anyone, again, I was an oil analyst for a long time. If anyone tries to tell you that oil prices are down for any reason other than the fact that there is a massive oversupply in a world where demand is dropping, then they have no idea what they're talking about. I mean, we're talking about more than 1 million barrels a day difference. And it's only going to get worse because these shale companies, I haven't even got to my second factor, but these shale companies, and not just shale companies, some of the Middle East countries with these huge spending budgets, including Saudi Arabia, they're going to keep producing and producing and producing. Because what do you do when you need money?
Produce more.
Yeah, you sell everything you can at whatever price you can, and that's exactly
going to bring the price down more.
Exactly. That's exactly what's going on in the oil industry. People are like, well, why doesn't OPEC cut production? Why should they cut production? They could make the price go back up to $100 a barrel, but they'll be producing half as much, and it'll be the shale producers that benefit. So, they're doing what they did in the 80s, and it's happening in a variety of commodities around the world. The CRB index is in free fall. The CRB index is not that far from the 2008 lows right now. I think I did a chart the other day, and it was, 30 or 40 points from it. I mean, it's pretty darn close. And the second thing, which is part and parcel, is the currencies. There is nothing good about the dollar index going up on a trade basis. It's not good for the United States. It's definitely not good for everyone else, especially because things are free falling. And again, I've talked forever about how the dollar index, when it comes to gold, is meaningless. I mean, the dollar index has been in a tight trading range for 10 years. Gold went from 400 to 2,000 during that time. But the point is, the dollar index has just broken out above a 10-year trading range. And that's why you're seeing absolutely crashing currencies. It's broken out above where it was in 2008. That's how much fear there is in the world right now of what's coming. And that's what you're not going to read on the mainstream, the fact that people are not buying the dollar because our economy is strong, because A, it's not, and B, how could it possibly stay, even if it was, with the whole world collapsing? They're buying the dollar out of fear. They're buying it because they know they want to be in the most liquid asset when the game collapses, which is also why they're buying treasury bonds. They're front running, knowing that the treasury is going to QE to infinity.
Yeah, which is actually, even though it appears to be irrational on the surface, Andy, makes total sense, right?
Of course. I mean, these are money managers. Money managers aren't. I mean, first of all, I call them hedge bombs. You know that hedge fund managers are getting slaughtered left and right. Yeah. Like I read this morning that hedge funds are more short the 10-year treasury bond than they've ever been. I mean, I know I've been saying all along for a long time that rates are going to go down to zero, and because of the QE. I mean, they don't know what they're doing, but they're also paid to be long. They're not going to say, yeah, one day we're going to have hyperinflation and everything is going to collapse. No, they're going to all go in long together, the Treasury bond, front running QE until the game ends, whenever that may be. And if they all go down together, well, that's money management. You just can't be short and wrong. That's for sure. And that's the whole concept of owning gold. It's the equivalent of being short other things and wrong. No one would possibly want to own gold like this year and watch what happens, because then you're out of business. And we know, we talk about what people are buying. They're buying Treasury bonds. They're buying dollars. They're buying gold. We have a record demand this year for gold and silver. We had a record demand last year, and we're exceeding it. So again, this is all paper. I mean, it's all, and we've seen the chinks that are getting there in the armor are getting bigger and wider every day. The negative, the backwardation, the forward rates, the plunging inventories. I mean, the fact that I wrote an article last week that says the end of the gold bear market, with bear market in quotes, because on average, the average currency gold is up about 4 or 5% this year, and in some Russian ruble, for instance, it's up dramatically. And on average, most countries' gold is only about 20% from the all-time high, whereas ours is 40%. So believe me, around the world, gold is not in a bear market, and it's only a matter of time before this cartel starts getting blown out of the water. And the Western world sees it too, or I should say the United States, because they're already seeing it in Canada, in Mexico, in all the other countries where the currencies are falling. The euro, in England, in Switzerland, and we haven't even gotten to Switzerland, which took rates negative last week.
Yeah, amazing, huh? And this just sends money over to the U.S. as well. That's one of the reasons money is still flowing into the stock market. It's really the only place to put it. A lot of money managers just ship the money over. They know what's happening, but final analysis, hey, your money went down the tubes. Well, so did everybody else's.
Well, one, it's momentum, as we said. People have to buy what's going up, but the stock market is up, to me, first and foremost, because it's being bought out by the PPT. I mean, we've seen the admissions. I mean, the Japanese government now has a policy, an official policy of buying stock. So do, by the way, the Swiss National Bank and several others. And of course, the United States, through its PPT, has been doing it. I mean, look at the dead ringer algorithm that I've been pointing out for the last 3 years. That's the number one reason the stock market's going up. Aside from all these other things like the carry trade, et cetera. But to go back to the Swiss, remember, last month in November, they spent, it was probably up until what I saw last week and ahead of this FOMC meeting. I've never seen a campaign, a propaganda and market manipulation campaign like that one to try to make sure that referendum didn't pass. Because I think it could have broken the gold cartel and the whole thing if it passed and they were out to buy 1,500 tons of gold and everyone would join them. But the whole point that this guy, Thomas Jordan, the head of the SMB, who I call Lady Macbeth because he doth protest too much, he's talking about how he wants a strong franc, a strong Swiss franc, and gold for some reason is bad for the strong Swiss franc. So what does he do? Only 3 weeks after the referendum, he devalues it by taking negative interest rates. And as we speak, the Swiss franc is, I haven't even looked at how many years low it's right at. And on top of that, the euro is plunged to a multi-year low. It's just about to break its whatever it takes lows of 2 years ago. And this is what the people voted for. This is what they want. Too many people, are stuck. It's like I said back when I voted for George Bush in 2000 because I was scared that oil stocks would go down. Turned out that they did go down anyway. Too many people in Switzerland, wealthy people, were scared into believing the stock market might go down if they voted for the referendum. And of course, the stock market will go down once this whole scheme breaks. And already gold is up 3 or 4% in Swiss francs. And one day it'll be back at its highs again, and then some in Swiss francs. And the people are going to mutiny against these monsters that have destroyed their long-standing tradition as the most conservative financial stewards in the world.
Yeah, really sad when you think about it. Really sad and unnecessary. And, it was kind of, I viewed it as the last hope for the world financial system. But
as I did.
Yeah.
As I did. I mean, it's not like it could have saved the world or anything, but it could have saved somebody, somewhere. The people could have stood up for themselves. And in a place like Switzerland, where you only have 8 million people, they really could have saved themselves. I mean, I don't know how much gold they could have actually bought on the open market but they get some. And the credibility of the franc, heck, I was getting ready to advertise for the Swiss annuities that Miles Franklin has access to. Yeah. I was all ready to even buy one myself, but not a chance now. So yes, it was to me the last hope of the people helping themselves monetarily. But we talk about the third thing. If someone asked me, what are the three things I'm worried about? One's commodities, one's currencies, and the third is the votes, the people voting people out. Starting with the Scotland vote and the Catalonia vote and the Swiss vote. And we just had these Greek snap elections, which, a week or two from now, we may be talking about the end of, the Grexit with Greece leaving and a whole new pigs crisis, because they're voting out the people in charge. They just had these snap elections in Japan. There's going to be so many more of these as people are angry and try to vote people out. And eventually they're going to get it on target and target these central bankers like the Swiss National Bank instead of just presidents and puppet heads.
Yeah, it's getting really interesting. The pace of it is really picking up, which I find fascinating as well. And that's what you have to start looking at, is that the pace of the whole thing is really getting faster. And that's going to lead us into what you see happening for 2015 and beyond, I guess.
Well, look, the trends, these are, again, fiat currency is a Ponzi scheme. It's just that simple. Ponzi scheme means it has to grow larger. It has to. Otherwise, it collapses instantaneously. And that's why the ECB they just keep talking more and more about more money printing. They have to do it. They can complain all they want about the Germans, but ultimately the Germans are going to have to do it unless they want everything to collapse on the spot. I mean, they're not going to worry about hyperinflation when they know that they're going to have to worry about a market crash. And the same goes with Japan and, whatever they're going to wind up doing in all these other places where currencies are crashing. It's inevitable. Look at I just saw this weekend, the Baltic index had its biggest fourth quarter drop in history. It's almost down to the all-time lows right now. The currency that I talked about, the CRB index and the currencies. I mean, these things are part and parcel of the explosion in debt that's required to keep Ponzi schemes going. And that's why it's so amazing to believe that we've made it this far, and that we've made it this far with them getting the Dow to go up 100 points a day. Absolutely incredible.
Mm-hmm. Yeah, it's shocking that it could keep together for this amount of time. I just can't believe that we made it through 2009, and yet, it's like the ever-ready rabbit. It keeps going and going, and Andy keeps going and going too. You find his work at milesfranklin.com, as well as his associate Bill Holter. Subscribe to their newsletters. You don't want to miss it. And subscribe to financialsurvivalnetwork.com. Go to our website. Got a webinar coming up December 29th at 9 p.m. Eastern Time. And David Morgan will be there. Anyway, Andy, we will talk to you next year. Be well.
You too. Looking forward to it.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.